G'day expats and welcome to another episode of Expat Chat, episode 93 today, and we're talking about the pre-departure considerations for soon-to-be expats who are about to join the hallowed ranks of the Australian diaspora overseas. For the folks out there who are new to the podcast, the gentleman on my left, he looks like a Siamese twin. You can see him on YouTube, is James Ridley. He's the Managing Director of the Australian office and looks after the Asia and Americas region. G'day, mate.
G'day, Brett, and those joining us today that are tuning in or I suppose viewing us on YouTube, joined by my co-host, Managing Director of the EMEA region, Brett Evans, who's right now in the sandpit Dubai. How you going, Brett?
Mate, all good, thank you. All good. It's year's cracking on. It's scary. Kids are back to school next week, and it's amazing how I'm still getting used to writing 2023, and when I write a date down, I'm still writing 2022, and we're almost September's next week. So life is crazy, world's crazy, everything's happening, and I think it's one of those situations where like I had a chat with an expat yesterday who's sort of been sitting on his hands, and I said, at some point you need to plant that flag and you need to rubber hit the road and need to take action because the world just keeps spinning and it'll out accelerate you, and another year will go by, another year go by, and apathy is not an investment solution.
No, I mean, I know I did an article a little while ago about the cost of inaction. And that's it. Sitting on the fence, maybe just building up cash, but not obviously using it in the right manner, investing it, putting it down as a deposit for property, investing in shares, tax-free, putting it in your super retirement, all those sort of things, and growing it. Because right now, it's just not going to keep up over the long term, with especially the growth of shares and other things. But mate, today
let's kick into it.
we talk. Yeah, well, I mean, we're talking about pre-departure, and I know, for those listening in, we do offer a pre-departure review service. So if you're unsure about what you need to know and what you don't know about heading overseas, reach out because we do offer that as a separate service, and you can find it. We'll drop a link also in the show notes as well. But there's a lot that soon-to-be expats need to consider. We often harp on about some of the big four accounting firms and the lack of support they actually give expats. And often when we are sent overseas as an expat, if we're an intercompany transfer, sometimes we do get sold the benefit by the employer that the big four accounting firm, they've got our back and they're going to take care of us. But often what we see is, a 1 to 2 page memo, and that's it. We don't get educated on the significant change of what's going to happen to our assets back in Australia from a tax aspect. We don't get educated around health insurances. We don't get educated around insurances in general. We don't get educated around investments or investment opportunities or the lack thereof, as well as concessions that we miss out on. There's a whole laundry list, to be honest. And then, almost within each of that I suppose, item, we can talk about separate strategies as well. So I thought today, why don't we just touch on it generally? Because otherwise you and I will be on this call for hours.
Yep.
That's right, mate. Yep. No one wants to hear us talk for that long.
No.
But I guess generally when we head overseas, there's a lot we do need to consider. Absolutely.
And it is. And I think let's just get the laundry out of the way from a compliance point of view to keep all our lovely compliance folks happy. All the information that we're about to share with you guys this morning, this evening, this afternoon, depending on what time of day you're watching or listening, is for educational and informational purposes only. Please do not treat this as personal advice. If you do need to get personal advice relating to your situation, get in touch with us because, we're the specialists in this. Mate, one thing I'll sort of point out to you as well is, we're seeing a ramp up again in new expats. That's without question. I like to look at the Australian property clock on the Australian government website. It does actually track there how many people are moving overseas on a daily and minute by minute basis, and right now it's sitting at about every 2 minutes and 12 seconds an Australian resident is moving overseas to live. So it's pertinent to have this conversation because we're not back to where we were pre-COVID. At one point, I remember looking at about 1 minute 19 seconds a resident will move overseas, but we're getting back there, certainly a lot more than during COVID. And to me, the biggest thing we see out of all these sort of scenarios is the combination of friends and family trying to be assistants, provide help, say, hey, have a crack at this. Good intentions, not always the best advice. Then there's Google, which is a great resource, but people can sort of twist things, in terms of interpretation. And, like I always joke about, if I believe Dr. Google, I've had cancer 3 times in the last week. So you use that, but it's the application of that information. And last of all, there's that sort of she'll be right approach, which certainly doesn't work. And we've said it 1,000 times before. When you are about to make that move, it needs to be done with the consideration of essentially you giving up your citizenship to absorb another citizenship. So I'm in the UAE. From a tax point of view, I can almost tear up my passport and act like an Emirati because that's how I'm taxed. So that should be at the forefront of everyone's minds. Just because an Australian doesn't mean you manage your assets like an Australian if you live overseas.
Yeah, absolutely. And I mean, if we jump into some general categories that I often discuss with soon-to-be expats, I think the common one and the common theme, superannuation, what happens to it? Is there anything I need to be doing with it? Should I be contributing to it while I'm away? What about the insurances in it? All those sort of things. I think one thing when you do head overseas, just remember that right now, if you are employed in Australia, the benefit that we receive is that we have that super guarantee contribution going in. And right now, the rate of that is 11%. So more broadly, when you are based overseas, if you haven't given yourself any thought towards retirement planning and your employer's not putting anything away into a retirement vehicle or asset on your behalf, you're already at a disadvantage to your Australian mates and colleagues back in Australia. And the reason for that is they've got someone paying 11% into a retirement account automatically for them. So once the dust settles and you're settled, you need to give that some thought, because when you stack up 11% over 15, 25 years, that's hundreds and thousands of dollars that you're missing out on. So you really need to think about that. But before we leave and as we leave, super. I mean, I haven't mentioned self-managed super fund because that's a whole bag of kettle of fish, but just buyer beware or caution beware around self-managed super funds if you have them, and the compliance requirements and rubber stamping. But typically insurances, if we do have insurance within super, I mean, I personally, and this is just what I've seen, 7 out of 10 super funds that I've come across, even though you have insurance on them, it usually becomes invalid after a few years that you've been overseas as a non-resident. That's just speaking from my experience. That doesn't mean your insurance is invalid, but that's often what we see. And the reason for that is it'll usually be within the PDS, or you need to return back to Australia to lodge a claim, and they want you assessed in Australia. Now, someone who is permanently disabled from some sort of accident or injury isn't normally jumping on a flight back to Australia. So that's just a common one. I think another one that I see often with super is generally the asset allocation that I've seen from a lot of clients in the past is incorrect. And what I mean by that is maybe the investment strategy that's been set up is probably not aggressive enough. And I say that because, if we're, say, 40 years old or 45, we still can't technically access super until we're 60 as a minimum. If we're not going to retire until 62 or 65, then that account still has another 20 plus years in which you're not going to touch the super. If it's invested in a moderate defensive investment or a balanced investment, it's probably not the right strategic asset allocation that you should have. So that's a really important one. But obviously just giving your super some attention when you leave as well. We still can technically contribute to super when we're overseas. I know it's not probably the sexiest of items, but it's one of those things we need to give some attention to, because remember, no one's putting anything into it whilst you're away.
Yeah, I think little things done early and often, give you the best results when it comes to a long-term investment strategy like super. If you're 35 years old and overseas and you haven't got employee contributions going in, even just something like $500 a month, just putting that in will just grind away over time, ensure that there's some sort of compounding on dollar cost averaging, which is the greatest, wealth creation tool. And, ignoring the noise and the bits and pieces out there that people talk about, how if you contribute to super as a non-resident, you're going to be deemed as a tax resident. Now, in that great Harding case with the gentleman in Bahrain, that was a pivotal moment for the ATO and expats back in, 2017, 2018, maybe a bit earlier.
Yeah, it's a little while now.
Well, if a bit of water's gone under that bridge. Now, in that case, the High Court did actually, agree that because super is not portable and we can't take it with us when we do move overseas, that it is highly plausible and understandable why you would keep it and continue to contribute to it, because obviously Australia is a jurisdiction that it is the most highly regulated financial jurisdiction in the world. There's a lot of protections in place. So, as long as you are a proper non-resident, you've got a visa, you meet the resides domicile 183-day test, contributing to super is not going to blow you up from a tax residency point of view. If you don't have any of the other bits and pieces, no residency, no work visa, no lease agreement, nothing, and you're sort of working from overseas rather than living overseas, then you could look like an Australian tax resident, but not because it's super, it's because of everything else.
That's right, exactly right. So, and I mean, that Harding case, won't go into it today. And I mean, it sort of alludes to the fact that obviously they're trying to modernise our residency rules right now. Still very old, 1936 Tax Act. They've opened up the proposal for commentary now and everyone to give their feedback. So it's open for consultation, which we'll be submitting the bill that we submitted to the government as well as some feedback and writing up a bit of a paper around that. So that'll come out on the socials, ladies and gentlemen, very, very soon. With regards to other things to be mindful of when we first head overseas, an easy one, private health insurance. And often we might have our, private health insurance with NIB, Bupa, one of those ones. Because you're now going to become an expat and a non-resident for tax purposes, well, it makes no sense for you to continue that insurance because you're not going to be in Australia lodging a claim on it. And the Medicare levy no longer applies to you at all whilst you're a non-resident. Therefore, often it might be best to contact your private health insurance provider and just see if you can put it on hold. See how long the max amount of time you can put it on hold. I like telling my clients to try and put it on hold because, one, it just keeps them in that health insurance system. That way, it's going to be a lot easier if they come back in 3, 5, 10 years' time and they don't have to go through the stress of proving that the lifetime health cover loading doesn't apply to them. And often, if a private health insurance provider is challenging you on that, you actually have to provide I don't know the name of the document, but it's the passport history. Yep, that's right. Passport history to prove you've been overseas for however long, thousands of days. So that's a really easy gimme in terms of just one of those little things you need to look after. Simple personal finance things, subscriptions, Netflixes, Stans, Binge. Maybe you're going over to another country and it's very likely a lot of those packages are priced very differently over there. So if you've got all those tied to a credit card, even gym memberships, I've spoken to clients in the past, they're still paying for a gym membership back in Australia and they left 18 months prior. So stack that one up. So it's all those little things. Get rid of them. Clean them out. You're not going to be here in Australia using it. If you're in the US, you've got access to a lot more streaming services here. It's the same with Dubai. It's the same with the Singapore. So that's another one in terms of just good personal finance items, looking after that. I think the next big one, which I'll toss it over to Brett, is knowing your obligations, especially with the ATO, what needs to happen. Really definitely good examples, probably HEX.
Yeah, and I think HEX and just general expats in general. And we like to think that there's a camera sort of over the top of us that the ATO is watching on a daily basis. They've sort of made us all quite neurotic with their actions. And look, it works. They're an enforcer. One thing the ATO is not is a mind reader. So while there's a lot of data out there, when you do leave the country, the ATO doesn't know whether you leave in 5 minutes, 5 days, 5 weeks, 5 years, or 50 years. They wouldn't have a clue. So when you do depart that country, do depart Australia, in that financial year, when you do your tax return to tie everything up, you need to notify them as part of that tax return that you have left the country permanently and your date of departure was X. That's good housekeeping because then they go, oh, okay, no, he's left. So therefore, what happens next is not just subjective from their point of view. Going forward, if you do have HEX, help, or some sort of student debt in Australia, there is a requirement. And I've never met anyone who's done this, but there is a requirement that within 7 days of your new address overseas, you're meant to notify the ATO of that new address. Never seen anyone done it. And to me, it's normally years after, not 7 days. Yeah. Anyway,
who knows their address that quickly though? I mean,
exactly.
Yeah.
And look, if you are one of those people, let us know in the comments below, because I'd love to meet you, because I've never met anyone who's done it that quickly.
No.
Anyway, so, we've got a general expat, no HEX debt, reporting requirements ongoing. If they're not earning Australian sourced income, like rental income and stuff, it's pretty light. You can just do a no lodgement advice. If you do have a rental property, certainly, you will need to declare that income. One that catches a lot of folks out is HEX and help debt, especially amongst the younger generation of expats that is not aware that when you jump on that plane, it follows you. So every year, exactly, every year you have to notify the ATO of what your worldwide income is. You have to use the average exchange rate that's provided by them to calculate it. And then they'll come back to you and say, okay, great, you've earned X amount of dollars, so therefore you owe us this much. One thing that a lot of people don't know is that you can put that on a payment plan to make life a lot easier. So if they come back and say, give us 10 grand, you go, hey, I haven't got 10 grand. You spread it over 10 months, makes life a lot easier. And if you use a provider like OFX or some sort of currency broker, they can actually pay directly into the ATO account. So there's no real reason why you can't do it. You just got to do it, unfortunately. It's just one of those things. Mate, next one we'll cover off on is the Australian Electoral Commission. So there's always a lot of grey space for that, AEC, and how we process that.
Yeah, I mean, I don't recommend clients stay on the AEC, especially when you're not going to be here for a few years. It's just another attachment, another tether to the, I suppose, the Australian side, and it's definitely something that could always be used against you in the future to question your residency. For those that are obviously in the Middle East and in tax-free areas, if you really wanted to take a really strong approach, then you'll take yourself off the AEC. I know personally, I've actually had a number of clients that are considering and ask me whether they should re-enroll so they can cast their vote on the upcoming referendum, and that's and I've said straight up no, they shouldn't, because it's just it looks really bizarre if you've got this demonstrated history the last 5, 6, 7, 8, 10 years, and then all of a sudden you've re-enrolled to just vote once off, and then you're going to take your name off the AEC. That looks suspicious, to be honest. That doesn't make sense. It doesn't align. So definitely don't do that, because it's just this additional tether that can be used. And if they do look at modernising the tax residency rules, I would see that as some form of economic connection to a degree. It is maintaining some sort of connection regardless. So I just don't think it's worth your while doing that. Absolutely not.
No. Totally agree. There's those who talk about their constitutional right and all that sort of stuff, which is great. But unfortunately or fortunately, my right to non-residency and not being categorised as resident for tax reasons outweighs my constitutional right. So I took myself off for that reason. Would I like to have my say? 100%. There's a lot of things that Canberra does that pisses me off, but I'm sure I'm not alone in that regard. But I rely on good folks like James and everyone else back in Oz to uphold my constitutional right on my behalf to exercise that option. So, mate, next one, let's run through. And this one came up, I saw it the other day on the Australians in the UA Facebook group, driver's license. There's an interesting one, because it created more debate than I was surprised at. And, it's sort of, everyone's got their opinion. It's sort of almost like the Medicare topic, which we'll talk about next. Mate, what's your thoughts on driver's license? If you hold an Australian driver's license, are you going to be an Australian tax resident?
It's a good question. I know clients have asked me before about their driver's license lapsing and whether they should look to renew it. And I just said, well, if you're renewing it, what are you putting down as the address? And then they're like, oh, well, I don't have an address. I was like, so what would you do? What would you put down if you were to renew it? They're like, oh, probably a family member's address. I was like, that doesn't sound right. So I don't encourage them to renew it, because they're not living in Australia and they've got sort of no intentions of coming back. And I personally just see it as another form and tether. And at the end of the day, if you need a driver's license when you come back to Australia, you might have gone down the pathway of getting an international driver's license, which might tie you over for the first month that you're back in Australia if you've returned. And then you'll just go into the local TMR and get your new license. Often they'll give you a printout page there that you can carry around and off you go. That's my personal thoughts, and that's just what I've shared with clients.
Yeah, look, it's one that's certainly open to a lot of debate, and I didn't renew my Queensland driver's license once again for the same reasons as with the electoral roll. The Queensland driver's license you can renew up to 5 years after expiry. So if I'm back in Australia, I'll drive my UAE license at that 4-year mark, then I'll work out whether I want to renew it or not. A lot of other states are very similar in that regard. Have we ever seen a client get pinged by the ATO for holding Australian driver's license? No. But to me, it's the weight of the argument. So it comes back to everyone. Look, if you're that I's dotted, T's crossed, changing your address with the ATO within 7 days of relocating sort of person, then yeah, go for it. But if you're not, I don't think it's going to cause you any duress. But and it's like the same with Medicare. You know, we've seen Medicare is probably the most debated expat topic we've got. Can you use Medicare as an expat? You know, if you talk to Centrelink and Medicare, you can. They say you can use it up until the expiry date, even after you've departed. But do you want to open the conversation up with the ATO to say your actions look like that of an Australian resident? Because an Emirati can't use Medicare, so why should me, who's based in the UAE? So, you know, we always talk about risk adjustments, managing risk as an expat, and that's just one more thing that to us, you shouldn't subject yourself to any further scrutiny that isn't already there, because there's always lots of scrutiny, you know, when it comes from all the regulators. And it's also certainly if you live in the UAE or countries like the UAE, you get given health insurance, which covers you in Australia anyway. It just means pay and claim. So you'll make that payment, send it back and claim it back. I'd rather spend $100 if I'm seeing a GP than risk or give the ATO that subjective capacity to be able to argue that I'm a tax resident. You know, I know I'm not unequivocally, but I don't want the stress of trying to justify that and trying to convince them accordingly. So it's the weight of numbers, you know, is what I always say to clients. Absolutely. Whether it's the driver's license, whether it's Medicare, all these things. The more there is, the bigger the argument that you could be a tax resident or you could have enduring ties to Australia. The less there is, then and I always say it's like you know, that person who I don't know from a bar of soap, they were to look at me, what, you know, without knowing me, what opinion would they form? And that's why I always do. I self-review all the time with respect to that, just to make sure I'm sort of dotting the I's and crossing the T's.
That's right. And I think a good other one around when an expat is first heading abroad is financial institutions. You know, the world is getting a much smaller place these days, and it's remarkable what clients receive from an old bank back in Australia. Go, hang on, we know you're overseas, but we don't have an overseas address, or what they commonly refer to as a TIN, tax identification number. And that's a really important one. Once you've firmly settled into your new country, you should be going back and updating your records on your financial institutions, share registries, whatever it might be, that you're hypothetically based in Singapore, and this is your Singapore tax file number equivalent. The reason for that is they are required to withhold tax. If they know that you're overseas but you haven't given any details, legally, financial institutions, especially the banks, ADIs, they are required to withhold the highest income tax rate on your interest income, 45%. Doesn't include the Medicare levy. So if you start to see a very large and high degree of withholding tax being applied to your interest income, that's why. They know you're overseas, but they know nothing about where you are, nor do they have any tax information either. So really important that once you have firmly settled into your new country, you provide them with that information, you provide them the fact that you're a non-resident and that you're now a tax resident of a different country, whether it's the UAE, Singapore, Hong Kong, China, United States, the list goes on. But that's a really important and I suppose one that a lot of expats actually forget.
No, all the time. You know, I met people who've been overseas for years and they've still got an Australian address and the banks don't know. The other thing too is brokerage accounts. Don't try and be a clever, I was going to say something else, but don't try and be too crafty by just using a family member's address for a brokerage account. Once again, ComSec, CMC, Vanguard, they don't know you moved overseas. They just think you live with your mum and dad. So they will treat your account as a resident account. They won't take out non-resident withholding tax. And I use this case a lot to talk to clients about. You know, a client of mine had to spend $2,500 refiling 5 years worth of returns because $150 per annum of non-resident withholding tax that wasn't, withheld. So, to me, for a little change can have a big ramification. So, mate, then I think on the last topic, and this is the other one, and I had someone sitting on the couch just behind me yesterday who was unaware of this as a new expat, deemed disposal.
Yeah.
What is it? How does it work? What should people be aware of?
Yeah, well, I mean, deemed disposal often applies to, and just, in its simplest form, if you're invested in things like shares, exchange traded funds, managed funds, anything that was ordinarily classified as non-taxable Australian property, which is just that, things that are often traded on an exchange, putting it simply. When you leave and become a non-resident, you need to decide whether you opt into what's called deemed disposal, which is just an on-paper sale of those investments. You'll pay a bit of capital gains tax if they've grown. You'll be entitled to the 50% CGT discount concession through that transaction. And then going forward, if you wish to maintain those holdings, they're now essentially tax-free in the eyes of the ATO. When you come back, that's when deemed acquisition kicks in. I won't go into that today. But this is something which expats aren't aware of, and they often forget to do it. And maybe they have some shares, and then 5, 6, 7 years later, they sell those shares. But because they didn't opt into deemed disposal, they are now liable to pay tax on those shares as a non-resident to the ATO. The drawback of that situation that plays out is they don't get to discount the capital gains from the period that they left Australia, and the tax rates are a lot more punitive. They're at the foreign resident tax rate, which means no tax-free threshold, and the tiering is 32.5%, 37%, and then 45%. So it's a really important one. That's right. And it's a really important one, and we're not often told about that. I mean, the last thing that I'm just going to mention as well and flesh out, knowing your tax obligations and the change on your assets back in Australia, that's a really important one. It's not something in which the big four accounting firms are going to take you through or anything like that. That might be around property, income from property, the concessions you're no longer able to access, the main residence exemption. I'm still talking to people right now that haven't heard of the main residence exemption and the fact they can't sell their former main residence and the tax they're going to pay. We saw that case a couple of months ago. They were thinking about selling a very expensive property and the tax was going to be over $600,000. Anyway, I'm obviously digressing a little bit. You can hear the passion in my voice, but you need to make sure you just educate yourself before you leave, because it could save you, in that case, thousands of dollars, and also set yourself up for that's right. Set yourself up for success whilst you're abroad.
Yeah, to me, it's making informed decisions, and I'd like to bold and underline the word informed. To me, it's the little things done right from the beginning lead to a successful expatriation and a successful repatriation. Winging it, she'll be right, as we say here, inshallah, it doesn't work. It doesn't work. Will you get a result? Yeah. Will it be the best result? Not even close. So, and look, I think we can go on a tangent, but I think those are the key things. If you are listening or watching us on this episode today, looking to make that move, 100% you need just to be aware of the changes and look, you don't know what you don't know. So you're not guilty for not knowing it, but you are guilty by not researching it.
Yeah, absolutely. Very well put, Brett.
All right, mate. Well, we'll leave it there. We don't want to bore the folks too much. So, mate, good to catch up again, and we'll see you on the next episode next week.
Sounds good. Thanks, guys, for tuning in today. Speak soon.
Thanks, mate. Take care.